picking up on that, this risk area around the world, we've got Russia, Eurozone, Middle East, sovereign debt troubles. It's arguable that gold prices should really have surged in recent years and be at much higher levels when you consider the conflict and the instability. So why is gold a bad investment when never before in history has the world's financial system been on more precarious footing?
Well, I would go back to my earlier answer, which is I said I don't think it's been a bad investment. Yes, it's down if you look in the last 2 years, that's true, but if you look in the 12 years that preceded that, it went up from $1,200 to it went up from $250 an ounce to $1,900 an ounce. So that gave you an extraordinary upside. I would say this is just a correction. It went up by, 8 times, between 7 and 8 times. It's then given some of that increase up. It's gone from being slightly overvalued to being slightly undervalued, but it's in the right ballpark. And I would have said at the moment, the risks versus the opportunities at the moment are asymmetric. Could I see gold down to $1,050 an ounce? Yes, it's possible. But I could also see it up to the best part of $2,000 an ounce. So what I'm saying is you've got $150 of downside, and you've got downside risk, and you've got possibly $800 of upside opportunity. Now, I would have said that as a betting man, those are quite good odds.
Do you think we'll ever see $10,000 an ounce in our lifetimes?
Actually, yes, I do. For it to happen now, you would need a major economic catastrophe. The two ways of getting to $10,000 an ounce are if you said that the gold reserve of the United States would have to back their money in circulation, and that could only happen at $10,000 an ounce, or if you said that the gold holdings of the United States, of the Federal Reserve, would have to meet America's negative net international investment position. So for those sort of scenarios to play out, what you would need to happen is the People's Bank of China to say, all of these treasuries we're holding, we're going to dump them onto the market, and that is going to push the price of treasuries right down, and therefore the yields right up, and that is going to be something of an economic crisis, not just for the US, but for the rest of the world. And if they said, however, what we're prepared to do is hand over the treasuries in return for your entire stock of the 8,000 tons or whatever the Federal Reserve has in Fort Knox, and that would work at a sort of notional value of about $10,000 an ounce. So for it to happen here and now, I think you'd need a major crisis. Otherwise, I think you're looking at $10,000 an ounce probably in about 30, 35 years' time. But yes, obviously it depends on how old you think I am and what you think my life expectancy is as well, but I think it's possible to see it in that time frame.